Gold has pushed through $5,000 an ounce, so are markets still feeling nervous? The price of gold topped $5,000 an ounce this Monday morning for the first time ever, as nerves about geopolitics, from Greenland and tariffs to doubts about the independence of the Federal Reserve, keep investors searching for a safe haven. President Trump could announce his pick for the next Fed chair as soon as this week, overshadowing Wednesday's rate decision, while earnings for many of the biggest tech names are also on deck. George Godber is a fund manager at Polar Capital. George, firstly, what's the gold price at this level telling us? Are traders feeling nervous?
Well, yes, that's traditionally what gold shows you. It is a safe haven asset. I think as you're interested, is probably the bigger picture is, if President Trump is sort of picking fights with his allies and, you're running a central bank that's been threatened with tariffs and that central bank has 60% in US treasuries, you wouldn't be surprised that central bank's probably thinking it might just have a little bit less in treasuries and a little bit more in gold. I think it is the US's constant sort of pressure it's putting on the geopolitical stage that is exerting itself into the gold market and is reflective of a weaker dollar world as well.
Are you expecting to see a further sell-off of US treasuries and the dollar as you say, international investors are less and less sure that they can trust the US?
I don't get the impression people are wholesale giving up on the US. I think that they will look at the fundamentals and say I've still got strong GDP growth there, some great innovation. But at the margin, are they looking for more breadth, more diversity, not have all their eggs in one basket? Absolutely. I think you'll see it manifest itself in many ways throughout different markets and different asset classes. Probably should have a little bit less in dollar exposed areas and a little bit more in a few other spaces.
At the same time, George, we are still seeing a lot of bullishness in the valuations of US big tech names. This week, Apple, Meta and Microsoft all report. What are the markets looking out for there?
Well, so it's interesting, isn't it? We've seen nervousness on the Mag 7, underperforming a little bit against the S&P, or certainly also a little bit of differentiation. Google doing really well, some of the other names less so. The focus, as it has been for some time, is going to be on the AI winners, the AI losers, who can paint that story of being able to capture this new trend. Google's done a very good job with their new product set of convincing the world they're well placed. I sort of expect that to continue. Some of the other names looking like they're struggling really to convince the market that they're not just chucking billions and billions and billions in capex in a way that's not going to monetize itself. So there'll be a lot of interest, but actually in the end, I think probably what we're going to learn as much is how much people are focused elsewhere, and it's not just the story of the Mag 7. The thing that's driven markets for the last 2 years, I think we're seeing breadth, we're seeing interest in other areas, and that'll be what we'll find out a lot about this week as well.
Finally, George, of course, the Fed also sets rates this week, but that could be overshadowed by President Trump nominating the new chair. Are you expecting the market to recalculate the odds of further cuts this year, depending on who he picks?
I think there's a number of important things there. I think if it wasn't for Greenland and for Trump and everything else we talk about, we would still probably honestly be talking about that story where the Fed chair was subpoenaed. I mean, this is an extraordinary event. I can't almost recall anything like it. So if you're the market now looking at this, will Trump get what he wants? Will he get more aggressive rate cuts from the Fed? It's quite difficult to argue against that. And we will get someone who's probably going to deliver that, and I think we can maybe put to bed the debate about, is it just one individual or a committee? Because, this is an extraordinary series of events that lead us to this. So I think we should expect more rate cuts. Ergo, we should expect probably a weaker outlook for the dollar. We've spent a bit of time talking about that. And I think, when we talk about people looking elsewhere in the world, there's definitely what we're seeing as a theme is people looking for value ideas, bits of the market that are cheaper, that haven't performed as well. And interestingly, that's sort of making the UK look a little bit more attractive and perform a little bit better because, it is one of those rare areas of distinct value in the UK, in the global market.
Briefly, though, George, the market still doesn't seem really to be pricing in the idea that the president will seriously influence policy. Why not?
I think at the moment, roughly speaking, let's say we're pricing in sort of 2 cuts. We've got a few sort of big forces moving. US economic data in some areas looking a bit better, especially if you're exposed to that big, huge tech spend we just alluded there. These numbers that are being invested are absolutely vast. That's making certain bits of the US economy look really hot. And then when we look at, say, other areas like labour force data or wage growth, it looks more muted. So lots of people talking about this K-shaped economy, a bit of this, bit of this. So I think the market's reacting to those mixed signals. I think if we take a step back and we change the person at the top, and as I say, with those extraordinary events about the subpoena, I think we can probably be a lot more confident of pricing in more cuts over the next 4 6 weeks, and that will, be the story as we go through the rest of the year, that we should be expecting that.
That was George Godber of Polar Capital. Don't forget you can watch more videos on Reuters.com.